Hello, today is Tuesday, the 21st of February, 2023. We always begin with our disclaimer. We go over our calls and then make some predictions. It's my trading plan for Wednesday, which is February 22nd, 2023. Please remember my calls can be wrong and any trade you make should be made at your own risk. Look for the pattern with the early low, which is this. Tomorrow's pattern should have the early high. We said the commonest thing was a gap and a prompt move outside the day's range. We certainly got that. And we said if we undercut Friday's low, would break a major trend line, take us much lower. And that happened as well. We had a price target 4,058.92 and that printed. We also get to cross one of our targets from last month off the list. 40.2112 gets crossed off. Here's support right at that price. Now I have some other lower targets from this year I'd like to see print on this drop, but it really isn't required. Here they are. None of them's really that close. Most of them are in the 39.20s. They all occurred on the 20th of January. And then on the 6th of January, we had a price just under 38.70. Those don't have to print on this drop, but I'd be happier if they did. As far as tomorrow is concerned, we have some higher prices. We have 40.1182 and optionally 40.1159. If the optional target doesn't print tomorrow, we'll forget it, but it'll print about 95% of the time. And this other target, 40.1182, that never goes away. MEJT said this drop isn't the real thing, gives us targets over these lines. Well, we gapped down, hit lower lows, closed over the midday low. That's actually a positive pattern if it's maintained. Now, nothing requires it to be maintained, and we could still gap down under this low and continue the drop. But if we don't, we should see higher prices even if we don't close higher. We also have a major league trend line here from these lows that go back into the October low. You can see how we dropped to it but not through it. And my rule is either you gap under that line or the line wins. So if we don't gap under this line, any move under it probably is going to retrace, not necessarily the same day, but it won't be a sustainable move. So if you want to continue this decline in a straight line, you really have to gap under today's low or else it's not going to stick. Now I don't know exactly how to count this, but I have us in wave red C, a black 2. And I would like it to end just under 38.60, but just because that number works doesn't mean some other number will, and that doesn't mean we have to drop tomorrow. On the longer, make that on the shorter term chart. This is a 30-minute chart. You can count this as in a wave 3, which is what it certainly looks like. But this wave 1 and this wave 3 are equal to each other. It's not the only place wave 3 can stop, but it's one of the places. And if that's the end of wave red C with a truncated 5, you'll see that C and A are related by a 1.618 ratio. Let's draw that in. If that's red C, red A is right at 61.8. So at least, doesn't mean we have to stop here, but if we stop here, we have good FEBs on the reds and the golds. So you could have a move up here, have a fifth wave which truncates, and that wouldn't break any rules. But just because it can happen doesn't mean it will happen. It only tells us because of the higher MEJT target, the balance of the waves, and the trend line hit, that we're at least at a plausible place for a rally to occur, even if the whole drop isn't over. And of course, if we gap down smartly, it kills the whole idea. This is just how it looks on a 5-minute chart with 1, 2, and 3 being equal to 1. Of course, you need 5 waves and you don't have it, but nothing stops us from having a truncated 5th wave. It's a possibility. It certainly isn't a requirement. Well, tomorrow's pattern does have the early high. We should still get. We could still gap down. I'm not saying should. Could. They're higher MEJT targets. If we don't gap down smartly, the rules call for them to print. We gap down, hit a lower low, but we closed over the midday lows. So if that's maintained at the open tomorrow, should lead to higher prices regardless of where we close. Now the volatility index has printed a bar completely over its upper Bollinger Band, and that's an indication of panic selling and usually occurs close to a low in terms of time. Doesn't mean you won't drop tomorrow, but if you print one bar like this completely over the Bollinger Band, it means that people are willing to pay a huge premium for puts. And usually when people are willing to pay through the nose for puts, they live to regret it. I don't think this decline's over, but bears need to gap under today's low if they want to continue the drop unabated. So the bottom line is I think we have further to go in this drop, but there is support here, and there is a higher target. And if we're going to just keep on dropping, you really have to gap under today's low, and if we don't, we should see higher prices. Tomorrow has the early high, and that's today's call.